Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. We got a special day out here today. My son Tom's right next to me, and he did his, we did our first show together this morning, the Bull and Bear Binary Option Hour.
We did.
That's a beautiful thing, man.
It was a good show.
Yeah. You know, folks, I started the show off talking about my grandmother's house playing cards.
Yeah.
But it's a fact. Do you know what I mean? It's in the DNA. There's no doubt about it.
Sure.
No doubt about it. Well, let's go over the market first, and we'll talk about what's happening. Dow Industrials are up 170 right now. Nasdaq's up 56. S&Ps are up 20. We have the gold contract down $7.90, traded $1,174 an ounce. Silver is off a penny at $16.13. We got copper up 4 pennies at $2.93 a pound. Light sweet crude's off 44 cents at $59.19 a barrel. Bonds, you have the 10-year down 18.6, 127.26. 30-year off 127, almost 2 points at 157.23. And King Dollar up 686 ticks, trading at 95.40. The euro is down 27 at 111, and the yen is up 88 at 120.25. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. We'll start with the world of the S&Ps. We're going to talk about bonds for a second, though. Okay. Those bonds got smoked yesterday.
Yeah.
They had a high-volume swing low. They're getting tested today. I suspect we're going to probably get some kind of a bounce out of here. And why, folks? Because the energy on the way down, it's going into the March 6th level. And that March 6th level, I will take some more cause in order to break that down. If we take a look at the S&Ps, what we have happening with the S&Ps is this. Yesterday, you go south with big volume. We are doing 70 million shares right now. We did downtown yesterday, 161 million. So you get a typical bounce. On the weeklies, it's going to, the weeklies really don't say much. When we put this on a weekly, it's like, okay, you're still at the highs. That's the real bottom line. Yeah. You get an expansion volume, but hey, you're still at the highs. NDX 100. We take a look at the 3 Qs, the NDX 100. What you have with the NDX 100. NDX 100 right now trading up 121. You have 23 million shares. We came downtown on 44 million. So the aspect between the SPYs and the Qs, folks, more than likely you have a probable B to C of an ABC structure on the way down. You came off the highs with volume. You're bouncing now with lighter volume. Small caps. The small caps are basically given the most amount of information. I mean, those things got killed yesterday. So the small caps yesterday, folks, came down with 73 million shares. You're going up today with 32 million. Bottom line is that these lows that were established out there in December, they're game. Gold contract. We take a look at gold. What do we have with gold? Bottom line, it wasn't a disaster out here. They brought gold down pretty good yesterday. Big volume. What we did have out here today, we're at 1174.50 and 1176. Well, so this is what you have. Your swing point here is 1174.10. But the way that she's out there, 1174.50, I would have much rather that she got over the lows of yesterday versus today. Because what you had is this. Okay, you did break the swing, and you did with lighter volume. Today we've only done 107,000. Where your support comes in is going all the way back to how we came off the bottom on March 18th. Yeah. That level March 18th, that had some action. Now, let's go over to the dollar, because what we had done this morning, what Tom had done this morning, is that when we were doing the program, the Nadex program live, and if you haven't test drove the Nadex product, folks, come over to our website at TFNN. You'll see the Nadex banner on the top, and on the side, you can bring that platform up. They'll put $25,000 of paper money into your account, and you can start trading that. When we were doing the program this morning, bottom line is that we felt that this dollar was basically, doing a dead cat bounce, and sure enough, the setup was pretty cool.
That's good.
Yeah.
First show, first trade, profitable trade.
I know, man.
That works out well.
Congratulations.
Hey, I got some good help, you know.
And it's May 1st.
It's May 1st.
I like that. It's May 1st, too. I know.
Have a good month.
There's no doubt.
Nice volatile month.
Yeah. Well, you know, there's no doubt there's that whole saying, sell in May and go away.
I know.
And, you know, statistically, I don't know if that's true or not, but the bottom line is that it seems that when May does start, volatility does start, going right up until October, and then things can calm down. You know? So we'll see where that shakes out. But there's no doubt when we take a look at the euro, because what the trade was, folks, is that the trade was shot in the euro, and the way that the baby played out was pretty cool, because it was like a small ABC structure down for the euro, and it was a small ABC structure on the way up for the dollar index. And this is you know, so check this out, because I suspect all this actually is a dead cat bounce too. You know, the aspect of an equity getting killed day after day after day. In this case, you know, the dollar. Bottom line is that all we did is come up to ice.
Yeah, we just looked for a risk reward.
Right.
We said, you know, the probability that this can have a bounce today with what's happened is worth it, especially in the trade that we put on, getting pretty much 3 to 1.
Yeah, it's 3 to 1, and the risk, you put up $60, right? How much you put up?
It was $56 for a max loss.
Okay.
For a max profit of 194. It was a 250-point euro-US dollar spread.
Right.
So when a 250-point, every point's going to be $1.
Okay.
So depending on where you are in that spread, your risk reward goes accordingly. So,
right.
So, you know, we were being a little speculative, paying a small premium in order to get risk reward in our favor. You know, where there could have been, we thought, a good pop, where if that thing really moves, we make the full $250 if that gets to the bottom of that spread.
Right.
You know, and we're only risking $56.
And out of the $56, we had to make up like $4 to $6 of the spread, right?
Premium that we were paying.
And the $4 to $6, folks, on ticks, that's very easy.
It's really interesting. It's not even a spread. There is a spread, but it's a short premium. And you're paying the premium because you're capped at your losses at 56 and your winnings are capped at 194. So you can't enter that trade at market and get 3 to 1 on your money. You know, you need to pay a small premium. And
we did this at 10 o'clock this morning. We had till 3 o'clock this afternoon.
So what time was it exactly? It was about 10:30. 10:25, 10:30 was exactly when for the 10 o'clock show, but when we put it on. And it was good. You know, it was right at about break even when we left at 11.
Right.
And the plan was to leave it on, so we left it on until 3 o'clock. And at the end of it, it executed. And for that $56, we got back $77.90. So you're talking about $21.90 in profit with only $56 at risk. And you had a lot more profit that you could have made. And that's what you have to keep in mind. You know, you're not.
And then the commissions were 90 cents on each side, right?
90 cents for each contract on each side. So just over $20 in profit for $56 risk.
Congratulations.
Not bad. No, it worked out well. I got some good help.
I love you doing the show with me, man. Man, Mitch, now I can retire now. No, I can't retire now.
Not happening, Mitch.
Now we're going to do more shows, Mitch. That's what we're going to do. We're going to rock and roll here, man. You know, the reality, folks. So check this out. The reality is that mathematically and probability-wise, he's about 8,000 times better than I am.
I learned from him.
Yeah, but he is. There's no doubt, man. There's no doubt, okay? There's no doubt about that, which is awesome, man. I mean, that's how it's supposed to work, right?
Deal.
Every generation is supposed to get better.
I got a good teacher, man.
That's how it's supposed to go, man. So let's take a look at this market, man. Okay, so, you know, the market itself, folks, okay, it's going to get really interesting watching this whole thing shake out. You know, because each and every time, well, you know this better than anyone because you're right next to me all the time. Each and every single time the market goes down, the bulls always bring it back.
I was thinking, I mean, look at the volatility yesterday and today.
Right.
200 points, 200 points.
Right.
That's what I was saying earlier is like if you have days that are up or down in the full span of a full spread.
Yes.
That's a huge move because you can get such, you know, we were looking at a spread today, 18 to 1 risk reward.
Right.
It's like if you can get those types of moves where you actually have the possibility to get the full move of the spread.
It's huge.
It's huge.
It's huge. Well, listen, man, congratulations.
Thanks.
Look forward to doing another show with you, man.
Awesome, man.
Awesome. You stay right there, folks. We're going to be coming right back. Dow Industrials right now, where is she? She's out there growling and prowling. We're going to be right back, folks. You stay right there.